Today, let's take a look. Bitcoin whales are dumping again, and whales are starting to sell off their meme coin holdings. Will the Federal Reserve really cut interest rates in October? USDC says, I can reverse any transaction I don't like. So today, I'm a bit torn between decentralization and regulatory protection. Which one would you choose? I'm Michael. Let's first look at the most important crypto data headlines from the past 24 hours. Last week, the crypto world was almost knocked down by geopolitics. For Bitcoin ETFs, there were outflows on 4 out of 5 days with $894 million in outflows. Ethereum's ETF did even worse, bleeding for 5 consecutive days, with $795 million flowing out. Bitcoin was directly pushed down to $1 billion. After dropping to 109,000 as soon as the US stock market rebounded last night, Bitcoin immediately turned around. This morning, Bitcoin steadily climbed back up to around 112,000. Ethereum also regained the $4,100 mark, and Solana bounced back to 210. The total crypto market value has also risen to $3.95 trillion, with a 24-hour increase of 2. A 1% short-term sentiment seems to have stabilized for now, but the real explosive story is still to come. A wallet belonging to an ancient whale that had been dormant for 11.9 years has just been awakened. Inside, there are 400 bitcoins, which might be making a comeback in the market. These 400 bitcoins are now worth $44.32 million US. Back in 2013, when they were purchased, they were only worth 23. So this leap in value can be written directly into crypto legend. Who's behind this next move? It's the Federal Reserve. The CME's FedWatch tool clearly tells us there's a 90% chance of a rate cut in October and a 65% chance in December. That's why the US dollar is being crushed and gold keeps hitting new highs. So what does the current market look like? It's like a stage play. Gold is on stage feasting, while Bitcoin is off stage just sipping soup. Whether Bitcoin can really take off next depends on whether the Fed will be dovish or hawkish next month. Now let's look at Bitcoin's recent move from 110,000 down to 10. Dropping from 1.1 million to 850,000 looks pretty scary, but in reality, the underlying capital hasn't suffered at all. If you look at Coinbase's order book, the premium is still between $30 and $50. It's like a sign on the wall saying institutions are here. As the price drops, institutions are actually buying even more happily. The order book curve hasn't turned downward. Instead, it's starting to stabilize at the top and even curve upward. This is a classic case of buying the dip. The long-term SOPR is still above 1, which means most of the old holders are still in profit and haven't been shaken out at all. So in the short term, there may still be some turbulence. Geopolitical conflicts and macro data could trigger a wave of negative news at any time. But in October, from 80,000 to 110,000, it's already like a discount zone for institutions. At these prices, institutions are all waiting to scoop up bargains. To sum it up in one sentence, the short term might be scary, but the long term is full of opportunities. The market is playing a psychological game with everyone right now. Whoever panics first loses first. Now let's see if the altcoin season will come. Whale activity has picked up again. Within just 2 hours, a whale swapped 2 types of tokens that were basically given to them for free, exchanging them for $13,889.28. 58 notabo add up to 11? $470,000 was secured, and at the same time, the altcoin sector is also emerging as a challenge. Let's take a look at CMC's Altcoin Season Index. It has climbed to 66. Last week it was 63, and last month it was 57. It has been rising steadily. You should know that in April this year, the index was only 12. At that time, Bitcoin was the only one to beat it. In December last year, the index reached 87. That was the altcoin season frenzy. So now, although the current position is not extreme, it is very likely that it has doubled. The recovery shows that money is flowing from the big currency to the altcoin. Therefore, the big currency is staying near $110,000. Once it rises, the altcoin is likely to follow suit. To put it bluntly, Bitcoin is now playing the role of altcoins. Just follow the lead, and you can also make a profit. Therefore, if you are a short-term player and want to copy the operation, you should focus on Ethereum and SoCoin. Rona and Ethereum's Layer 2 are trending. If you follow this trend correctly, it might just be the start of a profitable stock market. Okay, please like and turn on the bell. We'll help you build your coin, chain, and mining circles and earn 24/7 profits. For the latest news, you're welcome to join us. Today is Monday at 8 o'clock a.m. We've released a weekly review exclusively for Gold members, providing our own predictions for the coming week. I believe our weekly reviews haven't been wrong in the past 5 years. Okay, let's look at the news. The most popular news right now is last night's live broadcast. Everyone is asking if the bull market is over and the peak has already been reached. I love this kind of inexperienced look. Let me emphasize again, the last time Bitcoin broke through $70,000, reaching $69,000, just shy of $70,000. What was the US dollar interest rate at that time? Back then it was 0, now it's 4. So right now the Fed has just started cutting interest rates. The environment is different, the fundamentals are different, and the participants are different. So how could the bull market just end like that? In our weekly review today, we showed everyone the slope of the Fed-driven bull market. This current bull run fits the characteristics of a classic bull market very well. As you can see, Bitcoin has already climbed back to 110,000. It's back above $42,000, and Ethereum has reclaimed $4,000. Solana has also returned to $210. What's even more aggressive is that the executives of various asset management firms have started submitting additional documents for the Solana ETF, and they've clearly detailed the staking mechanisms. So now, all the analysis is saying that this round of ETFs with staking features is very likely to launch soon. Plus, the US SEC has already opened a green channel, so once October passes, we might see a wave of crypto ETFs launching one after another. That would mean the market's faucet is about to be turned on full blast.
Recently, institutions like VanEck, Franklin Templeton, and others have submitted revised S-1 filings, clearly outlining their staking arrangements. However, BlackRock was not included in the updated list. Bloomberg analyst James Seifert believes this indicates that issuers are actively engaging in discussions with the SEC, and the Solana ETF could be listed on exchanges within days or weeks. At the same time, data shows that 18 entities have already established Solana treasuries, with a total holding of 2,092. 10,000 SOL, valued at $4.2 billion, accounts for 3.64% of the total supply. Of this, 124,680 SOL are staked, with an average yield of 7.7%. This indicates that institutional funds are deeply invested in the Solana ecosystem.
Let me summarize Baltrinas's viewpoint for everyone. He said that the Bitcoin market moves 2 steps forward and 1 step back. Indeed, in this bull market, the price rises, then undergoes a thorough correction and a full exchange of chips before rising again. If you calculate it, if the ETF can achieve an annualized return of 60% or 70%, isn't that already extremely high? So he believes that there is no myth of a market that only rises and never falls. Currently, in Q4, Bitcoin is facing a double pull. First, institutions are under pressure to cash out at high prices. Institutions are buying low and selling high, right? On the other hand, expectations for a Federal Reserve rate cut are extremely strong, and a large amount of capital is expected to flow into risk markets. So if you want a piece of this pie, you must understand the rhythm. What we need to focus on is the direction of US policy, especially the Federal Reserve, and where the exchange-traded funds are actually going. After all, the market. What the market likes most is to let greedy people take a few more bites and then give them a harsh beating. Right now, many institutions, companies, and regions all want to issue their own stablecoins. But I want to tell everyone, if you want your stablecoin to be as profitable as USDT, the first mover advantage is already gone. As you all know, any asset pegged to the US dollar or fiat currency ultimately has to compromise with regulators. As for USDT, to be honest, it can freeze or even directly destroy tokens at any time. What is it like? It's like a martial arts master who grew up on the wild side. And what about Circle? It's like a government employee who has to wait for law enforcement or the courts to stamp approval before they can roll back a transaction or freeze assets. So what's the difference when it comes to freezing addresses? Circle is like an old cadre, moving slowly and steadily, but regulators recognize it. USDT, on the other hand, is like the Flash, super efficient. If one address doesn't work, they just switch to another, or simply destroy and reissue tokens. One focuses on speed, the other on compliance, but their goal is the same: making money.
Here, which is an abbreviation for circuit, refers to the complete enclosed path through which an electric current can flow. This fundamental concept in electronics typically involves a power source, conductive materials, and a load, facilitating the continuous movement of electrons.
Circle CEO Jeremy Allaire stated that the company is researching a mechanism to roll back transactions in cases of fraud or hacking, while still maintaining settlement finality. He emphasized that some advantages of traditional finance are missing in the crypto world, and some developers believe that a rollback prevention feature should be added. In other words, Circle wants to make USDT more like a traditional financial product so that banks and institutions can use it with confidence. However, this proposal has already sparked intense debate within the crypto community.
So you heard that right. Circle really wants to be able to reverse transactions at any time. If they actually manage to do this, they'll basically become the central bank governor of the crypto world. But the problem is, isn't the soul of crypto supposed to be immutability? What about the promise of decentralization? So think about it. How can real-world finance and so-called decentralized finance be compatible? One side needs a safety net. The other insists on self-sovereignty and decentralization. Everyone should remember how Ethereum's DAO forked and split. No one's forgotten that. To put it plainly, Circle is now walking a tightrope. On one side is the safety net to protect users. On the other is the faith in law and code. If the company pulls it off, it could write a new story for crypto. But if it fails, it might be blamed as the culprit for financializing and hijacking crypto, and its reputation could take a hit. Meanwhile, after a string of blows, how much longer can Hyperliquid hold on? Why did the US still lose to Singapore and the UAE when it comes to crypto ATM hardware dominance? Hyperliquid, which claims to be Binance's favorite, is essentially a decentralized platform focused on high leverage and high liquidity. But what happened? Recently, Hyperliquid has been in trouble. In March, a whale siphoned off $4 million and then ran away with $166 million in platform funds, and the Hyper token plummeted by 8% that very day. 3%. Just as they were catching their breath, the Solana meme coin B Jelly Jelly in the ecosystem was manipulated again, resulting in another $12 million loss. So now the team is busy patching holes and fixing the mechanism. Unfortunately, trust is like glass. Once it's shattered, it can never be fully restored. And to make matters worse, there's even more bad news waiting for Hyperliquid.
Hyperliquid announced that 2 accounts in the THBRL market showed highly abnormal activity and were attacked. The team responded by urgently suspending all currency market functions. According to on-chain data and third-party analysis, it was confirmed that hackers exploited a position management vulnerability in Hyperliquid's gradually marketed, repeatedly calling the router mechanism to steal 67, 300 USDT and 11, 200 GHBRL, totaling about 780,000. $20,000 in funds were then cross-chained into BNB and ETH and subsequently moved off-chain.
In the end, it was discovered that the fault wasn't actually NB's fault, but rather the logic of the mortgage holding and dining management contract. Hackers used Hyperdrive to pause the contract, instantly freezing the entire market. The Hyperliquid team worked for 24 hours to identify and patch the loopholes. Finally, the owner said calmly, "Don't worry, the money will be replenished and the market will open." The problem is that this isn't the first time a car has been sold. The short period of time has caused such a problem that even the community is already overwhelmed. Everyone needs to understand that this is the problem that decentralization and smart contracts face. If your contract is flawed and has a vulnerability, it's as easy for hackers to take away assets as taking something out of a hot pot. However, despite the risk of hackers, I prefer decentralization over centralization. Otherwise, what are you rolling? Do you remember when we went to New York last year and filmed a scene with 10 Bitcoin ATMs in Manhattan? It's true that Bitcoin ATMs account for 80% of the market share in the United States, with over 30,000 machines in the US, and New York is even more so. In fact, at the time, I asked a local American friend, and I said that Bitcoin ATMs account for 10% to 11% of the market share. Who would use this fee? He smiled and said, "Black guys would use it." I didn't understand at the time. He explained, "Who cares about 10% of the stolen money?" So now American ATMs are a lifeline. The problem isn't who has the most market share or who has more machines, but how to create a reasonable compliance ecosystem when the hardware is in place. Otherwise, no matter how many machines you have, users will still use them because they're really expensive.
The UAE is the most crypto-ready country in the world. They have government initiatives, blockchain initiatives, and they've created regulatory frameworks in Dubai and Abu Dhabi. They even have domestic Bitcoin mines here, so the Bitcoin infrastructure is already in place. Most significantly, they've recently rolled out their stable coins such as the AE coin, which is pegged to the drum.
According to a report that evaluates 4 indicators, holding rate, adoption growth, search activity, and ATM availability, Singapore and the UAE have become the most crypto-obsessed countries in the world. Singapore took the top spot with a perfect score of 100. 24.4% of the population holds cryptocurrency, and there are 2,000 related searches per 100,000 people. The holding rate has doubled from 11% in 2021. The UAE scored 99.7 points, ranking second, with a holding rate of 25.3%, the highest in the world. Since 2019, the adoption rate has grown by 210%, and currently, over 34% of the population holds cryptocurrency.
This ranking is quite interesting. Singapore actually managed to come in second. If you talk about Singapore's political situation as of this June, as long as you don't have a license, just opening your computer to play with crypto in Singapore is considered illegal. I don't know how many people in Singapore would still choose to do it. Of course, there's more interesting information further down the list. For example, Canada. Its adoption rate surged by 225%, shooting straight up to 4th place. Turkey, relying on 19. A 19.3% holding rate propelled Turkey aggressively into the top 5. Old-school European powerhouses like Germany and Switzerland couldn't keep up. Their progress in compliance has been slow and incremental. The United States didn't take first place, but its actions are solid. More and more people are buying Bitcoin ETFs, and the regulatory framework is becoming increasingly clear. As a result, in the NASS 2025 index, the US is steadily climbing back up to 2nd place. Do you know who has held the #1 spot for 3 consecutive years? It's India. An emerging market and a mature market have together formed a dual-engine growth pattern. So, the next competition is whether the US can take the lead over Singapore and the UAE in terms of hardware and regulations, as those two are advancing through policy and ecosystem development. Ultimately, this proves one thing. What the market wants isn't hype, but clear compliance and a smooth trading experience. No matter how advanced the hardware, it's not as good as having the right rules in place. Now, here's a quick update.
According to CNBC, the U.S. Treasury's coffers will run dry by September 30th. If Congress doesn't approve funding by October 1st, millions of federal employees may have to stop working and stay home. Today, gold is on the rise again, with the spot price climbing directly to $3,780, posting a slight increase of 0 within the day. With the stock market and crypto markets both down, only gold remains calm, saying, "Don't worry, I'll hold the fort." Recently, Zhao Changpeng joked that Asterions is indeed a competitor, but for Binance Coin, it actually turned out to be a blessing in disguise. While fighting, it even pushed up the price of its own token. The market also revealed that Apple CEO Tim Cook personally admitted that he has indeed bought Bitcoin and Ethereum. Cook said he finds this stuff quite interesting, and adding it to his investment portfolio gives it a bit more flavor, so he has been researching it for a long time. Bloomberg reported that SoftBank, Mutai, and Cathie Wood have all put money in, and the valuation has soared from $20 billion to $500 billion. Stablecoins have suddenly become half as valuable as Apple.
A good manager. If you are being slandered, don't waste your energy trying to prove yourself, because most people are there to see the fun. They don't care if you are right or wrong. They only care about whether the show is good or not. Most people can block you without even knowing you. Most people still like to see someone fall badly from a high place. So most people in this world like to kick someone when they are down. This is human nature. So don't be surprised if you encounter such an unfair situation. The best thing to do is not to explain, but to try to escape from that environment and stay away from that group of people. Because one of the stupidest things in life is to do those things that are originally insignificant. Go prove yourself to others. Tell me what you really think and why you want to fly to the South China Sea. So remember, don't waste your time and experience on irrelevant people and things. If you want to understand this, you will find that sometimes silence is more powerful than truth. Leaving is more precious than proving. Time will make all the messages rot in your silence. If you understand, please click like. The above is all the content for today. Here are our member rights. We hope you can join as a member to support our channel to make it more professional. We can also lead all members to A8, A9 together. Let our Bitcoins increase and become rich together. See you tomorrow.